Wait, you're buying a house? Here are things to consider and discuss with your real estate agent and your licensed lender when making your biggest investment purchase. First of all, look at your income and your expenses. Create a detailed budget that includes your monthly income, your current expenses, and how much you can realistically allocate towards mortgage payments. Then you want to look at your debt to income ratio. Now, lenders often look for a debt to income ratio of about 36% or lower, but double check and check with your lender. Calculate your ratio by dividing your total monthly debt payments by your gross monthly income. Then you can look at mortgage options. There's fixed rate versus adjustable rate mortgages. Fixed rate mortgages have a consistent interest rate, while adjustable rate mortgages may start with a lower rate, but they can change over time. Then you want to discuss your loan terms. There's common loan terms are 15, 20, or 30 years. Shorter terms have higher monthly payments, but less interest over time. Pre-approval, very important. Get pre-approved for a mortgage to understand how much you can borrow, and that way you can show sellers that you are serious and that you are a serious buyer. Before you hit the market and fall in love with the home that may be out of your means, get pre-approved. Then we're going to talk about down payment, saving for your down payment. Aim to save at least 20% of the home price to avoid private mortgage insurance, something they call PMI. However, some loans like FHA and others require as little as 3.5% down. Talk to your lender to see what they offer. Then you have your closing costs. Typical costs. Closing costs can range from 2% to 5% of the loan amount and include fees for the loan origination, the appraisal, title search, and insurance. And negotiations. Sometimes sellers are willing to cover part of the closing costs, especially in a buyer's market. Another reason it is important to have a professional real estate agent working for you to handle those important negotiations. Now let's look at ongoing costs. You have property taxes. These vary by location and are typically a percentage of the home's assessed value. You have homeowners insurance. This protects your home and your personal property. And rates depend upon location, home value, and coverage level. And it's also very important to budget for maintenance and utilities. Budget for regular maintenance like HVA servicing and those unexpected repairs like a new fence or maybe a new roof. Utility costs can include electricity, water, gas, and important to me, internet. And the location is important. The neighborhood is important. Research crime statistics to ensure that the area is safe. And look at the amenities. Consider the proximity to grocery stores, parks, restaurants, and other amenities that are important to you. And you have to look at schools. Look up ratings and reviews of the local schools. And even if you don't have children, good schools can increase property values, which becomes very important when it comes time to sell. And speaking of schools, look at school district boundaries. Ensure the home is within the desired school district boundaries. Sometimes it's very hard to tell. And how about the proximity to work, your commute time? Calculate your daily commute and consider traffic patterns and any stops you need to make along the way, like daycare. And public transportation. If you rely on public transport, check the accessibility and the reliability of local services. Look at future development, planned infrastructure. Look into upcoming projects like new roads, public transit expansions, or commercial developments that could impact not only your quality of life, but your property value. And look at those zoning changes. Research any proposed zoning changes that could affect the neighborhood. All of this is why it's important to have a good real estate agent who can help you navigate each of these topics. Let's look at property features, size and layout. Square footage is important. Ensure the home has enough space for your needs. And look at the floor plan. Consider the layout's functionality, including the number of bedrooms and the bathrooms and the flow between living spaces. And how about the condition and the age of major systems? Check the age and the conditions of things like the roof, the HVAC, plumbing, and the electrical systems. And look at cosmetic issues. Identify any minor repairs or updates that might need to be made, such as painting or new flooring. and the potential for renovations and structural changes if that's something you're looking at. Assess whether the home can be modified to suit your needs, like adding a room or remodeling the kitchen. And if you're thinking of that, think about costs and permits. Consider the cost of renovations and whether you'll need permits for certain projects. And look at the outdoor space, the yard size. Ensure that the yard is large enough for your needs. Things, whether you want a garden or a play area or space for your pets. And what about the amenities outdoors? Check for amenities like patios and decks and pools and fencing. And see if you can add a pool if that is on your list of must-haves. Now, inspection and appraisal, both very important. Your home inspection. Have a professional inspector, hire that qualified inspector to check for structural issues and pests, mold, and other potential problems that you may not be able to see. And they'll give you an inspection report, and use this inspection report to get with your real estate agent, but possibly negotiate repairs or price reductions if that is something that is needed. Then you have your appraisal, your fair market value. The appraisal ensures the home is worth the purchase price, which is crucial for securing the mortgage. Then you have your legal and administrative. You have your title search, Alamo title. We are going to clear title. This ensures there are no legal claims or liens or disputes over the property's ownership. And then we will issue a title insurance policy. This is insurance to protect against future claims. Now, you also have your Homeowners Association and your HOA rules. Review the rules and regulations to ensure they align with your lifestyle and how you plan on using the house. And look at the HOA fees. Consider the cost of HOA fees and what they cover, such as maintenance of common areas or amenities. Now, you also have zoning laws, property use. Verify that the property is zoned for the intended use, whether residential, rental, or home business. And future projects. Ensure you can make any desired changes or additions to the property under local zoning laws. And how about long-term considerations? Resale value, market trends. Analyze local market trends to gauge potential future property values. And property improvements. Consider how improvements or renovations might increase the home's value. And then you have to look at market conditions, buyers versus sellers market. Understand the current market conditions to make informed decisions about timing and negotiation. And there's economic factors. Consider broader economic factors like interest rates and employment rates that might affect the housing market. And then there's future needs, family growth. Think about whether the home can accommodate potential family growth or changes in your lifestyle. Aging in place. Consider whether the home will suit your needs as you age, such as accessibility features. The best part about all of this is your professional real estate agent will help you thoroughly evaluate all of these aspects so you can make a more informed and confident decision when purchasing your home.